All right, we've got some business news for you now. Oil prices soaring today to levels unseen in almost 30 years. After that attack on Saudi Arabian oil facilities over the weekend, it slashed approximately 5% of global supply.
And benchmark Brent crude rallied as much as 20% to over $70 a barrel. It's made some recovery, and as you can see there, it's still a bit high there.
All right, Saudi Arabia is the world's biggest oil exporter ahead of Russia, Iraq and the United States. It's also responsible for supplying over 10% of global crude, more than Iran and the UAE combined.
Before the attack, the state-owned Saudi Aramco's processing facilities pushed out 9.8 million barrels a day. It's now producing 5.7 million a day.
Earlier, we spoke with Dr. Tilak Doshi. He's managing consultant at Muse, Stancil, and he explained how the attack would affect Asia.
The large Asian oil consumers, China, India, Japan, South Korea, and of course Japan and South Korea as OECD members do have their requirements for storage. I believe one of the countries has already mentioned that, South Korea has mentioned that they will access their strategic stocks if required. But I think there are two factors that we need to keep in mind. One is the price factor affects the whole world. It's one global market, so we are all affected. But for the Asian consuming countries, the large Asian consuming countries, which depend on Middle East oil heavily, and in Saudi Arabia in particular, they may be impacted more severely if the structural damage to infrastructure requires more than, say, 2 months to come back up to full production. And up to now, up to this point in time when the attacks occurred, most of the market was worried about oversupply and a slowing global economy. Now, we will only be able to see what the final impact is after we know more about the damage and the rate at which that production capacity can come back on stream.